Good evening, everyone, and welcome to this evening's strategy building session. Okay, so let's have a quick recap of what exactly happened last month. Okay, remember last month we went kind of back to basics and looked at the building blocks of what a strategy consists of. And what you should remember at this point in time is the fact that we've got five different sorry, we've actually got three different types of parts, okay, that a strategy is built of. We've got what we call our entry conditions, which is the first one. And that would be any condition that needs to be met in order to open the trade, to get the entry, to start making money. Then we've got what we call the exit conditions. Okay, so that's the second part or portion of a system, and that would require anything that needs to happen in order for the entire trade to close out. Not a portion of it, but the entire trade. Okay. Now, when we know what happens in order to get in and we know what happens in order to get out, we know how to open and close the trade. But the third little part, the last bit that we need to know, is what happens while the trade is open. And this is what we'd call our trade management system. Okay. Now, this would be a load of different things that gets combined in the trade management section. Now, in the trade management section, we would make a note of our risk to reward parameters if we're using a target. So in other words, if I'm going to try and make twice as much compared to when I lose, I'd be aiming for a risk to reward of 2 to 1. Now, when we're looking at stop loss placement, we need to know exactly where we are going to place that stop loss to determine where the target's going to be by using the risk to reward ratio, right? But in order to do that, in order to enter the trade and work out a 1% risk, we need to know exactly where we're going to place the stop loss. So stop loss placement is described in the trade management section as well. And we always start off with, remember, stop loss is placed at the most recent high or low within 7 candles. Now that 7 does become a variable. And because it's a variable, we are able to change it to anything else. So if I want to say 4 candles, perfectly fine. If I want to say stop loss is placed at most recent low or high within 14 candles, we can do that as well. But 7 is the good average to go for. It gives you a close enough most recent high or low that you can be running with. Right. Okay, how's it, Dana? How does one back up a profile? Okay, not a problem. Let's quickly have a look at that. Let me show you. I'm just going to get the sharing set in such a way so that we can see all the drop downs that pops up as well. So excuse the, there we go. Yep, that's going to look a bit messy. No worry. Okay, I'm going to get to the platform. Okay, so how to back up a profile or save a profile. Very, very simple. Okay, we go to file, and this is how you're going to back up any work that you've done and so forth. What I'd recommend, especially for those of you who have started building your strategies and you're plotting them on your profile. Let's say we've got our chart over here, obviously, and we're going to be using this system in particular. We can save this, okay, by right-clicking on the chart. We go through to template and we save the template. So I'm just going to call this test template A. And we Okay, I'm going to hit save. Okay, so now it should come up in my template list. There we go. Okay, so that's like saving a stencil for particular charts. So it saves the chart background, it saves the candle formations, or whether you're using bars or candle charts. It saves the indicators you're using and the settings of those indicators as well. So instead of reloading everything from scratch, you could just duplicate it by loading the template on. So you can back up your templates, you can back up your profiles as well. And the current profile I've got here, you can see I've got quite a lot of charts on. The profile saves a grouping of charts. You can see I'm on my end of day profile. Oops, sorry, right there. That's where the profile is situated, or it shows you which profile is active. But to back up any of those, we're going to go to File at the top here. Then we go to Open Data folder. And from here, there we go. There's the Profiles folder. So in there, right, there's the different profiles you see, all named, the ones that were created. So let's say I want to save that end of day itchy profile. There's the charts and so forth. I'd right click. I'd basically just save the entire folder. Okay, so you want to copy it like that, just save it in a different space, and then you just go and paste it back into the profiles folder. You know, if you download a new platform, that kind of thing, it works even if you're going to do it on another broker's MetaTrader platform. Okay, it saves all that info. Same as with the profiles, you can do the exact same thing with your templates. There's all the templates. It's the TPL files, as you see there. Okay, so that's how you'd back up your profiles and templates. Also, remember to back up your backtesting via this method as well. Save your backtesting once you're done as a template. So that means, you know, if you do lose the work and that kind of thing, it's going to be easy to regain at least by just loading the template, because the template saves all the different types of entry positions, all the writing for stop to entry distances, those type of things. So a note of all of that is being saved as well, you know, with the different types of templates that you're going to be saving when backtesting. Okay, so that's the method you would use to go about that. Okay, right. Now, let's quickly go back and tackle. Okay, good to see you on as well, William. Right. What we're going to do now basically is we're just going to let me just stop that quickly. I'm going to get the normal one up again. Okay. Like I said, what I'm looking at now to try and kind of get you guys to understand at this point in time is I want to look and focus a bit on tweaking today. Like I said, what's happened basically is last month we started looking at the basic building blocks of putting a strategy together. Okay. Now, you can get as wild as you want with your strategy setups. I really don't care what you come up with, how you go about it. The key factor is to follow the format that you guys are being taught. And remember, with the strategy, I need you to follow the tick chart format, because that is going to make sure that you maintain the discipline that is needed, okay, in order to become successful and consistent within your trading. Okay, so that we can actually kind of determine more or less, you know, what type of results we would be getting when running our back tests. So coming up with a couple of different ones tends to help quite a lot. Now, all it is it's putting down a couple of different criteria. Remember, we need a couple of things to tell us how to get into the entry. Okay, that's entry conditions. We need conditions to tell us when to get out. Okay, that's our exit conditions. Now, we're always going to start off with only target and stop as our exit criteria. Okay. Within our entry conditions, that's up to you. You choose one indicator to indicate direction with, trend. and another indicator to signal entry or timing of the entry into that direction. So obviously you want to buy a signal happening in a bullish trend. Okay, we're not going to take anything that works against one another. Right. Now, exit conditions, tweaking wise, would be some of the things we'd be looking at first. Okay. Or stop movement or placement altering would be another one as well. One of the ways in which we start tweaking our systems once we've done our first backtest, to give you guys a nice idea, is we start off by looking at what would happen when we remove targets. Now, the biggest thing that all of us try and find and search when testing a system is to find a system that produces, firstly, brilliant profits. Okay. Remember one of the things that I said quite a while back. Hit rate of a strategy means absolutely nothing. It's about the amount of profit it makes. The only thing that hit rate ever actually tells you is how psychologically easy or difficult a system would be to trade. The lower the hit rate, the more difficult it's going to be psychologically to keep the consistency with that system. It's easy to trade a system that you win most of the time with, purely for the fact that with a system like that, you really lose. You feel like you're top of the world, and it's simple to follow what needs to happen. Problem though is that every now and then you do get to have some of those bad cycles coming into play as well, and that tends to, most likely knock you off of balance or out of sync with your system. And this is why the backtesting is important, because it's going to show you what those regular type of cycles are. So once you understand and you're aware and you're prepared in such a way where you know exactly what to expect, more or less, on an average base, it becomes a lot simpler taking those little bad sessions, that come along. Let's say 5 up to 10 losers in a row. You're going to get those sections. But if you see that happening within your backtesting and you're still making money, then it just shows you that even with those types of sections, it's not the end of the world. You can actually rely on your system and be quite comfortable in terms of how the flow is running, even when we're hitting a rough spot. The key factor comes when we start getting into a bad patch where it extends past what our backtesting has done, because then it's telling us this is now for an extended period, actually trading outside of what we know our worst case scenario is. Therefore, either, number one, the market conditions have started changing and we need to adapt or tweak our system to the new market conditions. Okay. Or what could have happened as well is that we are just hitting a sort of a slightly different geared market. It's let's say it could be more of a emotional based type of market where we're seeing slightly different movement for a shorter period of time. Okay. Well, what I'm trying to say is it's not going to be as extended as a full market cycle change, I would say. It's going to be more of a short-term effect, but it lasts longer than our normal tested cycles, purely for the fact that people are being ran with their perceptions in terms of what's going to happen with price most likely. Could just be a big period of consolidation happening as well. And you need to tie in with all your different, knowledge in trading to be able to better plan on how you're going to attack it from that point onwards. Big thing is now, the first thing is what we're going to need to look at is obviously how we start tweaking on a system once we've done our first back test. Now, like I said, if it depends on what your results come up with. Once you've gotten the detailed results through your backtesting and exposure Excel sheet. Now, with that spreadsheet, it gives you a very good idea of what your type of average flow is, of what your average winner is compared to average loser, average size of the trades that tend to run points wise. You're going to be looking at most winners in a row, most losers in a row, your worst performance, within that back test. It's going to tell you basically most points gained, most points lost, average points gained, average points lost. It's going to give you your expectancy as well. All those different little things are what we use to determine what we want to do or need to do in terms of tweaking. So it's really dependent on what those results deliver within your backtesting that's going to guide you as to what you'd want to look at or what you want to fix. Now, like I said, especially when you start with that first backtest, you're going to notice that you start picking up on particular cycles, I would say, or reoccurring instances within certain trade setups that might give you or lead you to particular tweaks that you could implement just with what you've been doing with placing your entries. You might see that, let's say you're looking at your hit rate and you've got a hit rate of 30%. If you don't want a hit rate of 30%, you want to push that up a lot higher. By all means, try and focus on getting that done first. Okay, it's up to you and how you'd like to go about it. But one of the ways in which you could try to do that is by making sure that most of the trades that get taken basically hits target or profit. That's how you turn a loser into a winner. That's how your hit rate gets pushed up. But there's many different ways of doing it. One of the ways is to actually drop your target. In other words, instead of using a 2% target, who said you can't use 1.5% target? You will have quite a couple of more winners that come into play. But you might notice that your success of profits start dropping, purely for the fact that now with every winner that you're getting, you're actually getting less money, though you're still losing the same amount. Okay, even though you've turned some losers into winners. The other thing you might need to check as well is you might need to just have a look at specifically why most of your losing trades are losers. Try and find an equilibrium, I would say, in terms of what causes most of those losers. Is it, and try and separate them individually. Almost set up for different scenarios. So let's look at just wrong entry signal. In other words, as soon as you enter the trade, it just keeps on going. It starts going against you, and it keeps going against you and hits your stop. Okay, so they just go and run stops. That would be one option. So you go and count how many trades have done that. Then you go and look at trades that might have reached the 1% level and then turned against you, okay, and hit your stop. You count the amount of trades that have done that. Then you would go and you would say, let's say, you'd look at how many trades had trend changes show, okay, while you were in them, and then went against you. Okay, and you count the number of them that as you enter, trend changes and then it goes against you. So you count those amounts of trades. Okay. Now, why am I saying this? I'm giving you a couple of different ideas here, okay? But these are going to be some of the factors we're going to start looking at. If you find that most of your trades just run completely against you, okay, while you've gotten the proper signals and so forth, then you might want to look at limiting, okay, some of those losers. See if you can find any correlation between those moves compared to some of the others. It might be as simple as using something like a moving average to get you out of the trade. So we're looking at different exit mechanisms here now. Okay. Remember, the normal methods of exit that we're going to use whenever we start off with is either the target being it or the stop loss being it. But now we can start bringing in, especially when we're tweaking, we can start bringing in new exit mechanisms. This only comes into play when we're tweaking, not right in the beginning, because we need to use the most basic setup for testing our strategy in order to just get something to gauge any of the changes we're going to make against. So this is why I always say we start off with the 2-to-1 target, and we start off with a stop loss placed at most recent high low within 7 candles. We also start looking at starting off with basically just the target and the stop as the exit. But remember how I said that we can start counting how many of those trades that do turn into losers actually turn into losers once they've changed direction. Okay, so we could go and we could find and we could say that we're going to close any trade as soon as we get a change in trend while we're in a trade. So we were in a bullish trend, like let's say in this direction we were in a bullish trend, right? Took the trade, then a little bit later this goes down, it starts turning bearish. As soon as it confirms going into bearish, I can close the trade. You see, now I've brought in a third exit condition. Okay, and that is closing any trades, no matter whether they're in a profit or whether they're in a loss. Okay, and we take whatever is there. This might mean that you're going to turn certain losers into winners, but it could also mean that you're going to turn certain winners into losers, okay, because they needed a bit more time to get there. But it's one method of looking at minimizing the amount of losers we get. The key factor is it's very similar to a normal type of analytical, or let's say even something like the audio profession. It's a process of elimination, guys. Okay, you're going to test it, tweak and see, does it better the results or not? So does closing any open trades, let's say as soon as there's a change in trend, okay, on the entries I've taken, will that affect my profits in a positive or negative manner? If it affects me in a positive manner, I'm going to keep that tweak, because that tweak has pushed my profits up to a much more reliable level. You're going to need to keep an eye, though, on what that does to your hit rate as well, because it's not only going to most likely change the hit rate, it's also going to change the profits, right? So you might get more profits, but you might get a lower hit rate. Who knows? You might get a better hit rate. Remember, the key factor is just to get to a point of tweaking, right? And it's going to be trial and error. But you want to get to a comfortable level with the amount of tweaks you've brought in and with the type of hit rate you've got. When you're comfortable with what you've got, then you can start running with it. Okay. Nothing stops you from using your system on more than one chart as well. You can duplicate it on as many charts as you want. What you need to do, however, before you can just load on, let's say, 10 charts, you're going to need to look at what's your worst drawdown, okay? Because that is going to play a huge factor. Let's say one chart has got 10 losers in a row. That's 10% down before you start making any profit whatsoever again, okay? Are you going to be comfortable with losing 10% before you start making profits again? 10% on your full portfolio? Now, let's say you do that on 3 more charts, and all 3 of them also show you that you're going to have a worst case of 10%. We go with the theory that, let's say everything happens simultaneously. It's 4 charts, bringing your account down by 10% each. That's a total drawdown of 40% then, worst case scenario. Can you stomach a drawdown like that before you see the profits? Your profits are most likely going to be 4 times more than what you had originally. Remember, your losses are 4 times more as well, or your worst case scenario. Okay, so we just need to check and see whether it makes it viable for us The stress is going to be enough to handle as well. These are all the external things we need to think of as well when doing the tweaking, when looking at, the results that we're getting with some of the tweaks we've made. And remember, like I said, exit conditions, right? We could basically remove the target as an exit condition, and we can only exit on, let's say, an indicator giving us signal. Let's say we could look at using the stochastic crossing against us as an exit mechanism. We could use price closing from above to below on a buy, on a moving average, as an exit mechanism. Nothing said we can't use a indicator, but you see, we'd bring an indicator in, and it's probably going to be something completely different to what we already have. This is how we start using more than two indicators, okay, to trade our system with. Every single indicator's got its particular job. So we might have the MACD for direction, and then we use a moving average for entry, and then we use a stochastic for exit. So we stay in the trade once we've gotten the signal, but we only get out once the stochastic turns against us. Just like that, we could use something like a parabolic SAR, and we could say we only close the trade once we get the parabolic SAR changing direction. Okay. So you could either use something like a trend change on an indicator, you could use something like a cross on an indicator, anything like that you could use as an exit mechanism. And playing around with those different indicators with the different options. Play around with the eyes first. So try and see what happens just by combing through it with the eyes and that kind of thing, with a couple of features, and see which ones works, the best, by purely, kind of gauging with the eye. It starts getting you sharper as well in terms of, speeding up with analyzing which indicators works on a chart. Okay. But you're going to need to kind of find something that fits your profile, that fits your flow of trading. Okay. If you like going risky, by all means, take it as intensely as you want with any of these conditions. Okay. Remember, we don't want to add too many conditions, because too many conditions can make it very difficult to maintain as well. Okay. So you can see now that we can play around with exit conditions quite a lot. We remove targets, therefore we can actually make more money, purely because of the fact that we're not limiting our profits to 2% now. Let's say the chart keeps on trending and keeps on trending and keeps on trending, and we only get a signal for getting out once it hits a 10% profit. That's how you start pushing for higher profits. So normally when you want to push for higher profits on a tweak, removing the target in your exit condition works as a good one. Let's say you see that your charts don't get too far in terms of running up or down with the direction you're going with. Okay. One of the things you could do as well is you can minimize your stop to entry distances. So all you do is, instead of using 7 candles, you might say, I'm going to use the previous candle's high or low. Nothing says you can't do that. That means, let's say you found a system where price continuously runs at a good point, but you seem to not reach your full 2%er. You can lower your 2% target by purely just minimizing your stop to entry distance. And that is by changing the amount of candles you use, okay, to determine your stop loss. Okay, so that's another thing we can look at. That's in the trade management section. So you can see that the places we're going to be playing around with our tweaking is mostly going to happen within the latter 2 sections of our strategy. Our entry conditions remain the same. We only play around with exit conditions and trade management. So we could play around with stop loss ratcheting, partial closing. Those things are extra things we can bring in order to kind of tweak the system and make it perform with better results, higher profits. Okay. lowered risk. The last thing you'll try and change is to try and change some of the entry conditions. Okay, you might not change, let's say, an original entry condition that you had. You might add actually an extra entry condition, maybe using one other indicator to filter any of the crap moves or crap signals that you got. You can do that as well. Nothing basically stops you from using an extra indicator to filter out some of the original entries that you got taken. Okay, if you find a method of removing more losers compared to winners by using a method like that, by all means. Okay, but you can see that there's going to be three different components that you can tackle in terms of tweaks. You can tackle the entries, you can tackle the exits, and you already saw that there's many variations in which you can tackle the exit conditions. Okay, like I said, we can use different indicators to tell us when to get out. We can either look at using trend changes to get out, closing below certain indicator levels, okay, like moving averages and so forth. We can even get out on moving average crosses. We can get out on stochastic crosses. We can get out on simple things like Fibonacci levels as well. That's using another indicator, okay? But that is basically using something else to base targets on, okay? So that's another kind of targeting method that we get then. There's many different variations. Nothing stops you from getting out on candle formations as well. That's something you can apply as well. You just need to remember to use the proper wording when adding those tweaks, okay? We still need to go through it, still need to make sure that any ambiguity is taken out, any unsurety is handled, that we're not left with too much variables. Because remember, if we've got too many variables, it does tend to make it a little bit more difficult in terms of backtesting. So we want to keep the backtesting as simple as possible for ourselves. And the more you know in terms of the little things that you can tweak, the quicker you can run through, those precise tweaks. Okay. So that is what we're looking at in terms of tweaking with different types of indicators. Okay. I want to find out from you guys at this point in time. Are there any questions in terms of tweaking from your side, or is there anything in particular that you, let's look at a particular issue that has come up when you've backtested, okay, a strategy, and you wanted to make a tweak, okay, you wanted to fix something. What was that issue, in terms of having the strategy needed to be changed and that kind of thing? Any question you guys have got in terms of your strat building that you'd like me to tackle? Okay, so it looks like there's not really any questions, that kind of thing. Okay. Okay, now all good, William. All good. What questions have you got there, William, in terms of normal strat building at this point in time? I suggest that you just need to get going with it, because that's the thing. I found most of the time the simplest thing in terms of getting started with your strategies is actually just putting some random couple of things together. Okay, you start with a blank template in terms of strat building. Break it up into, okay, figured as much. It does tend to, we do need to kind of try and force ourselves in terms of doing it, but trying to make it as simple as possible is going to be something that helps you a little bit better. So that's why I focused specifically with last month's session on the strategy layout again. Okay, so try and focus on just placing the layouts down on a normal sheet of paper. Okay, and firstly, pop down the standard starting points that we're always going to use. So for exit conditions, all you're going to have is stop and target, nothing else. For your trade management system, you're going to have a risk to reward of 2 to 1, and your stop loss placement is going to be stop loss is placed at most recent high or low within 7 candles. We'll always start with that. Okay, we don't bring ratcheting in yet. We don't bring partial closing in yet. None of that comes in yet. So you're going to notice that you don't even need to fix anything in terms of your exit conditions or your trade management system. The only thing you actually need to build or put together is your entry conditions. So you need to think of 2 indicators which you feel comfortable in terms of using, and start with that. So you're going to have your buy section, a buy is taken when, and you're going to have your first little tick box. Only have 2 tick boxes for buy and then 2 tick boxes for sell. First tick box is going to make a note of direction. Next one is going to make a note of timing of entry. And that's it. That's going to make it a lot simpler for you to kind of get going and get started with your new strategy. All that's left then is just to run a back test. Okay? And like I said, you guys are going to find out, that running with the back testing product, okay, it eliminates a load of the effort and work. Okay, your back testing is going to be done, tweaking and everything. Most of the stuff's going to be done within an hour. You're going to be doing. I do all my tests, via that at this point in time. But that you're going to notice that just makes the whole back testing of your strategy so much simpler. And I think that's probably the reason why most people struggle to get started with the job of building a strategy, purely because they know what's waiting with backtesting. Because it is a lot of work. That's why we've developed those tools to make it a lot simpler for you guys. The whole thing is it just comes down to the tweaking afterwards. So you'll only really start, polishing your strategy once you've done the initial backtest. We'll never know with what we put together whether it's going to be a winning or losing system. That's why I have a couple of ideas that you're looking at. And before you start getting into a backtest, maybe play around with 3 different types of strategies that you're looking at, and kind of gauge with just your point of view, just by looking at the charts and zooming out slightly, which one of those strategies that you've put together now in terms of entry conditions produce nice trades, okay, good flows, and shows promise. Okay, you could just kind of gauge that off with the eye just by looking at the chart and the flows and so forth. Right? It's going to give you a much better idea then of which indicators flow better with that particular chart and so forth. And that should help you guide yourself towards a particular strategy. Okay, so that's the big thing in terms of strategy building. Start off with the simple process. Okay, remember, the only thing you're going to ever work on in the beginning is just the entry conditions. The rest all standard. Okay, stop an entry for your exit conditions. That's it, nothing else. Only after we've done our first back test do we start tweaking on that. Okay, and the tweaking is where the process comes in to try and eliminate any of the problematic areas or issues and so forth. Okay, so guys, remember, once you've started doing your first back test and you've finished with that, by all means, you can kind of email me the results and have me have a look over it and that kind of thing, to kind of see where you might need to kind of go a bit better. Which type of changes, tweaks might work good for you in your particular case. Everybody's is going to be slightly different from one another, purely because you're going to be trading different time frames. You're going to be trading different times of the day, and you're going to be trading different instruments and systems. Okay, so this is going to be something that's going to now start fitting you all as individuals a lot more closely. Okay, but like I said, don't be afraid to kind of just get started. I mean, get going, get running. It's all part of the learning process. Okay, and the biggest learning factor about strategy building is going to come down to how to spot what type of tweaks you need to make. And the only way you're going to get that done is by actually doing the work. Okay, it takes a little bit of practice, a little bit of playing around, but you're going to notice that you're going to see what tends to happen is whenever we get confronted with one or other type of particular issue, we can apply certain Okay, looks like we're back now. Sorry about that. Seems like I had a bit of a drop in connection here. Let me just get the sharing back on here. There we go. Okay. Like I said, yeah, sorry about that one, guys. Um, I think you should all be able to hear me again now. Just let me know if you guys can hear me. Okay, perfect. Thanks, William. Okay, right. So, like I was mentioning, the whole point is this getting to the process of being able to identify the best type of tweaks to make with the results that you get from your first backtest. Okay, backtesting is a simple process actually. It's just a lot of work. Okay, the key factor with strategy building is being able to analyze your backtests correctly. So, like I said, I'll be putting a couple of things together, and I think with next month's session, we're going to start looking at how to analyze our results to kind of find the most appropriate tweaking solution. Okay, so we've talked about the different types of tweaks we can look at, and there's actually many more, guys. There's many, many, many more. But this shows you that there's almost like an infinite possibility of options available when looking at changing your strategy or making it run or perform better than what the results showed for us. So with that, um, all we have to do is we have to get into the process of starting building our first strategies. And like I said, it's a simple process. Just take the rough layout of your strategy tick chart. Start with the most basic components. So in other words, we stick with only target and stop as exit, and then we stick with stop loss placed at most recent high or low within 7 candles and risk reward of 2 to 1. Okay, on the trade management. Those are what we start off with. We only play around with and so forth. Like I said, we're going to be looking at then is we'll try and identify or look at different methods of identifying what type of issues we firstly get once we've done our first backtest, and then how to find solutions with the different types of tweaks that we've got. Okay, so I'll start showing you from next month how certain tweaks eliminate certain issues. Okay, it's going to be another kind of just a way to make the tweaking process clearer and more simple for you guys. You're going to notice everything's going to come down to how well you know your indicators. Okay, and that's why once you start reading an indicator slightly different to what the norm does, it actually opens up a lot more options for you. Okay, so try and play around with as many different indicators as you can to just get a feel for the different options that is available out there for you. And from that, you can better then kind of assess what type of indicator matches your particular trading style or system, okay, and would help you push up your profits. Okay, so another thing that you might need to look at in terms of tweaking with your exits is, to give you an idea, you could have an overall trending indicator that you use to tell you when it's trending bullish or when it's trending bearish, and then you take all your entries. Now, with what I'm going to be explaining now, you're going to need to have a particular chart that generates slightly more trends than erratic movement. Now what I call erratic movement is more or less on our smaller time frames. That's 5 or 15-minute charts. You want charts that have got a bit of a better flow towards them. But nothing stops you from taking entries, okay, based on that direction or trend with whatever indicator you're looking at, and keeping them open and only closing the trades whenever the trend changes. Okay, so remember, we can use that as a exit mechanism. We'll obviously have a stop in place, but remember, like I said, your exit mechanism, you can use change of trend as your only exit mechanism in terms of without obviously having a target. Okay, so you can remove target and only use your trend being changed. I mean, if those keep running and the trend doesn't want to change, you can push anywhere from 3 up until 10% profit on any trade. It's just because you're leaving those trades on the table while the momentum is still there. If the momentum is in your favor, keep it there. That's the thing. It's knowing when to let your winners run, okay, and knowing when to cut your losses. And when do we cut our losses? Well, we know that once it hits our stop loss, that's when we're cutting our losses, as simple as. So when you're using a stop loss, nothing stops you from removing the target and actually just exiting on trend change. Nothing says you can't use something like, again, changing direction of a moving average, crossing of a moving average. Really any type of indicator you want to. But that's how you push for those extra profits. If you find that a lot of the trades do get into a positive level before they move into a negative level and turn into losers, why not look at ratcheting a stop as soon as you get into a bit of profits? Okay, it's also part of the backtesting process then, but that is now a stop loss management process. Okay, it's giving you guys just a couple of extra outside point of views here, and that's it. It's to try and help you guys be able to distinguish what types of tweaks might work good for the particular solutions that you're trying to apply. So with today's session, obviously, I mainly want to focus on opening up the different variations that we could look at in terms of tweaking, but looking at which type of tweaks would fix which type of solutions. I think that's what we're going to be tackling then next week specifically. Okay, and I'll get into quite a bit more detail in terms of that. But tweaking is the process which you're going to notice is going to make the difference in terms of profitability on your system. It comes down to, like I said, being able to analyze where the issues are within your system. Like I said, you're going to have the inside information in terms of what that is, purely when you're actually starting with your first backtest. Because from there you'd be able to determine, what comes up most of the time. Now, let's have a quick look at different ways in which we can apply these stop-loss ratcheting methods. Again, you can either choose to just run a close on it or actually ratchet stops according to it. Again, that's indicators. Let's say we get in on a cross of the moving average, but only exit once we get price hitting the moving average. Okay, so we've got a normal stop loss set in place. We get the entry. Price runs. We only exit. So this should already be at more than a 2% profit if we took it round about here. Okay, and it should be flowing quite nicely. Now, what you're going to need to remember as well is time frame wise, what are you going to be targeting? Remember, your larger time frames do tend to have better types of trends flowing with them. So if you're looking for a system that particularly focus on trends, then you're going to want to look at your larger time frames. Your smaller time frames are a little bit more erratic. It needs a little bit more skill in terms of identifying what type of trades might be the best to take, okay, or what type of strategies or systems would work. Yeah, so you're going to notice there might be a lot more tweaks coming in with those particular systems. But it comes down to finding something that you feel comfortable with running. If you feel that a particular system that you've put together is just a little bit too erratic and so forth, then you need to work on it. You need to tweak a couple of things. And you'll have a very good idea of what that would be, okay, because like I said, you've got an idea of what you're expecting. Okay. Another thing as well is just don't get to the point where you're testing and tweaking and tweaking and tweaking and tweaking and get to the point of actually over tweaking. Okay. This is why once you've made a tweak, save the results, and remember to name it properly. So name it maybe tweak 1 and give a name to the actual tweak that you're making. Then you call the next one tweak 2, but you include all the tweaks that you've included or are incorporating now, as the new test. And from that way, you can then kind of gauge the different type of results against one another, and you want to keep those results once you've done those tweaks, because you want to compare and see, which of those moves do work the best and which ones work quite well in conjunction with a few other ones. Okay. Otherwise, you're going to find that it's going to be very difficult to keep track of, which tweaks work best. So making sure that you save your spreadsheet according to the type of tweak you've done and numbering them is going to make a huge difference in terms of the amount of work you want to or need to do as well. From there, basically, it's just kind of making sure that you apply the tweaks accordingly, to your backtesting, by just, changing the settings within your backtesting product. Click, drag, drop, tweaks done. Okay, and you just run through it continuously like that. So you can run with quite a couple of different tests, and come up with some good solutions pretty quickly. Okay, to give you an idea, first tweaks I looked at after I did initial 2-to-1, okay, on a normal simple strat. So I look what would happen if I push it to 3-to-1. So I just make the tweak in the conditions of the backtesting product, run it, boom, look at the results. Better or worse? Am I happy with the profits? Am I happy with the drawdown? Okay. Then I look at 1-to-4. Okay, and does it better or worsen? Then I maybe look at 1-to-5. From there I'd play around, maybe 2.5. Okay, maybe 1.5, maybe 1.8. So I'd look at it at a variation of, which type of target a level would work best, for the type of indicators that I'm using. Once I've got an idea of that, then I might look at, okay, what would work better now after I've determined, a good level target percentage-wise, okay? Now I might look at what would work better. Using that particular target percentage, let's say we came down and we found 3-to-1 works best. Okay. What would happen if I run with an open target instead of 3% then? Would that give me more profit than the 3% target that I found between the different target levels, which work better? Okay. Now I find that, hey, open target, there's going to be different exit mechanisms that I'm going to use. So I'm going to need to test a couple of different exit mechanisms. Okay. So you're going to notice that that's going to lead you in various different routes and paths, and there's going to be a couple of tests, over and over and over. But it's small little things that needs to be tested every single time, and that's just changing one setting in the backtesting product and doing a click and drag, and it does all of that for you. Updates the exposure and backtesting sheet automatically, all of those things. You just, import, done, boom. Okay. So like I said, your tweaking is going to run a lot faster, when running with that. Okay. It's just running, and ticking them. Like I said, it comes down to a process of elimination. Trying a couple of options and seeing which comes out best. If none of them come out best, then it's on to the next conditions. Seeing what you can fix there. And that's it. That's basically what it comes down to. Like I said, process of elimination. That's the thing that you're going to notice with this. Okay. The more you do it, the more accustomed you come to which types of tweaks kind of work in, let's say, what type of scenarios within your system. Okay. Like I said, that comes just with the experience, but that comes down to doing it. Like I said, first thing is first, try and get your strategies together. Okay. Start off with the most basic setups, like I've been teaching you guys, and you just start from there. That's it. Okay. Remember, just start off with a normal 1 week or 1 month backtest. If it's an intraday system, only 1 week. If it's an end of day system, only 1 month. Okay. Purely for the fact that I don't want you to do a full test and you found that you've done it incorrectly. Okay. Rather send me the initial 1 week test or 1 month test just to see that you've done it correctly according to your own system, because that's where I'd be able to pick up as well on where you specifically are having issues with either your own system, in terms of understanding what your wording means, okay, or whether you're actually spotting the correct entry candles, waiting for confirmation properly. We'll be able to pick those things up from that. So you only need to do a short little one in the beginning when it comes down to actually backtesting your strategy. Once I've told you that, okay, I'm happy with what you've done with that 1 week test, then I'll give you the go ahead to do the full test. And from there, we start working on doing the tweaking and those type of things then. Okay. The first part is just going to be a short little one. It's just to make sure that you identify the correct entry levels and so forth, and you are reading your own system correctly or interpreting the conditions for entry properly. Okay, and that's it. From there, then it's just running through the tests, and running the full test. Okay. Right. Now, we're basically at the end of the session, guys. I just want to find out from you guys, any other questions, before we get started with the next session in 30 minutes? Okay. Otherwise, it looks like everything's good and well then. Okay. Right. Okay, that's it, guys. Thanks for joining in for the session. I hope you picked up a couple of things in terms of the strategy building, especially with the tweaking. Okay. Remember, there's quite a lot of conditions we can play around with. The key factor comes down to just starting with the most basic, presets in terms of putting your first strategy together. It's just tweaking from there on. Okay. Right, guys, I'm going to be setting up the next webinar and I'll be sending you the email. Just keep an eye out for the email. Somehow it looks like it does take a little long to send all the emails out because I'm sending it to, a bulk amount of you. So just keep your eye out even until, just a couple of minutes before the session. It might still pop through. But I'm just going to get that setup done now and I'll see most of you in half an hour then. Okay. Thanks for joining this evening, guys. Check you in the backtesting session.